Now it's time for the morning trade. We take a look at Netflix, and for that, Caroline Woods right here at the New York Stock Exchange with me, taking a look at Netflix, which is higher by over 5% and has some ambitious goals. I see them. That's what they wrote. Sounds good.
Yes, Netflix actually reports earnings later this week on Thursday. It's the second best performer in the S&P 500 today, behind HPE, which you mentioned is the top performer here. And ahead of earnings, we're learning about some ambitious long-term goals. The streaming giant aims to achieve a $1 trillion market cap and double its revenue from $38 billion last year by 2030, so by the end of the decade. Also looking to earn about $9 billion in global ad sales by 2030. This is all according to the Wall Street Journal, citing Netflix's annual business review meeting. Netflix currently has a market cap of around $400 billion. It doesn't disclose ad revenue. In terms of global subscribers, we know at the end of last year it had over 301 million subscribers. Well, by the end of 2030, it wants to end with 410 million global subscribers, so wants to tack on another 108 million, and it sounds like they're looking to do that overseas. Sources called out India and Brazil specifically as key growth areas. They're also looking to triple their operating income by 2030 from $10 billion last year. Now, according to the Journal, executives are optimistic about the company's growth prospects, even despite growing concerns on Wall Street, of course, about the economy and, of course, trade policy uncertainty. That said, I will say analysts aren't necessarily as optimistic in terms of the growth rates. Analysts are expecting annual revenue to climb by 87% to $72.8 billion by the end of 2030. That's according to FactSet estimates. So not quite 100% growth. 87% growth, though, is nothing to ignore, that's for sure. In terms of Netflix shares, though, analysts still very bullish on the name, despite the fact that it's up about 63% over the past 1 year. It's up about 10%, 11% in 2025 alone, while, as we know, the rest of the tech sector mostly lower. 75% of analysts rate Netflix as a buy heading into earnings. The median price target's $1,100 a share, so more than 10% upside from current levels. Keep in mind, Netflix trades about 7% away from all-time highs, so analysts see it getting back to those all-time highs and even moving further from them. Now, ahead of the report, we have seen some bullish analyst commentary. Bank of America just came out and reiterated Netflix as a buy, said amid recent market volatility, Netflix's strong subscription model with critical entertainment, which historically has performed well in a recession, has made the stock a defensive choice for investors and driven out performance versus other technology and Mag 7 companies. And then yesterday, Evercore ISI added Netflix to its tactical outperform list, saying with an ultra-cheap $7.99 ad-supported plan offering arguably the best entertainment value for your money in the land, and with our recent survey work suggesting reduced churn risk despite the recent price increase, they think that it's a buy and is on the tactical outperform list. We've been hearing that a lot from analysts lately, that this is considered a defensive play as we talk so much about recession and as the prospects of a recession have increased. People think that Netflix is not something that's going to be getting cut from the budget.
You could have a staycation, not pay for a trip, and stay home and watch Netflix every single day, a different movie, right? And then if you're, worried about money or a recession, and that is real. I mean, you may in fact see people, watching more Netflix and not going out to dinner or something. That could be behaviorally something that benefits Netflix overall. Certainly a winner. There's certainly a lot of great shows that continue to do well. I see some of the names popping up. I'm not a big Netflix watcher, but I saw a few that I'm sure you know of. But so there you have it. Final thoughts?
No, I think that that's exactly why the bulls remain bullish, despite the fact that we've seen so much of big tech really get crushed so far in 2025. Netflix has been outperforming, and analysts think it will continue to because of exactly what you just said, because of the fact that, as Evercore said, it's the, best entertainment value in all the land for your money. I think that, they think that people will continue to pay for Netflix, or they can also scale down, right?
Yeah.
If they're paying for the more expensive premium tier, they could always opt to to pay for a cheaper tier, and then there's ad revenue associated, obviously, with the commercial tier. So Netflix finally got me to stop trying to steal my brother's password and to start paying late last year. So I'm contributing to those gains.
That's true. That's true. Look, they cracked down on the password, and it worked well for them. And they have good global ad sales, and they have shows like Adolescence and Black Mirror that are really getting a following, have a following. So we'll continue to watch that. Thank you, Caroline Woods. Good to see you. Now we turn our attention over to Tim Biggam, option strategist at Buy Alerts. Tim, good morning to you. How would you go about a trade here for Netflix today?
Yeah, I'm more taking a look at the fact that the stock has been really the best performer recently of any of the big cap names. Certainly it's not in that trillion-dollar market club by any stretch. And I think it'll have trouble getting there, even though the company's pointing to that. But into all these upgrades and ebullious, kind of outlooks by everyone, I'm getting a little less bullish, certainly almost neutral here. So I just like the fact that IV is still high even next week. We have earnings coming out after the close Thursday, which is kind of a strange period because you have the market close Friday. So could be, if you will, a little difficult to kind of play with it. You almost got to move out to the following week, which is what I'm doing. I'm just going out and looking kind of at the technicals. That $1,000 level still, to me, even with today's rally, looks like some resistance to the upside. The downside, somewhere just below the 900 level. So I'm selling an iron condor. IV is still inflated, getting, I think, overly rewarded for it. Selling the 1,005, call spread, and selling the 870, 865 put spread for next week, getting well over $2.50 for that. So like the return on risk, if Netflix just kind of levels off here or pulls back, now have plenty of downside for it as well. And more importantly, have the ability post earnings next week to kind of move whichever spread is kind of working out well to defend the spread that isn't working out well. So if the stock rips to the upside, buy back that short put spread, move it higher, bring in more premium. Conversely, if the stock gets torpedoed, move that call spread down, pick up more premium, reduce the potential risk. And if the stock levels off, you get the best of both worlds here.
Yeah, understood. And it's not just a short time ago. This morning, UBS reiterated the buy rating, and they have $1,140 target. I don't know if Netflix is a name that you watch and trade a lot. Also, your thoughts on the market, big picture.
Yeah, big picture, kind of almost the same as Netflix, and Netflix being, if you will, the best outperformer. But stocks certainly look like they put in a short-term low around that 5,000 level, to use the big round number on the S&P 500. But 5,500 here is some major resistance. I think, the rally may be looking to stall here. And I think stocks generally, valuations, given the uncertainty, need to come down even further. So even though we're getting into earnings season, I don't think this earnings season, the actual earnings will be important. It's more kind of the look forward, the guidance the companies give that really will be critical here. So same thing with Netflix. I think a lot of the upside we're seeing today will be tempered post earnings, and same thing with many stocks out there. So I look for the market to continue in this kind of big range, no change, bouncing between 5,000 bound into the downside on the S&P, and somewhere just a little bit higher is probably the resistance until further notice.
All right. Tim Biggam, option strategist at Buy Alerts. Thank you so much, Tim. Great to see you. Appreciate it. Thanks.
You bet. Anytime. Take care now.